U.S. economy not doing as well as Bernanke, although it is still growing. The government reporting today that second quarter GDP grew at a 2.4% annualized rate. That's less than economists had expected. 2.6% was the forecast, and far below the 3.7% rate for the first quarter. Joining us now with his outlook for the U.S. economy is Russell Price. He is senior economist at Ameriprise Financial, a $10.9 billion financial planning and services firm. And Bloomberg ranks him among the top economists for GDP forecasts. Russell, thanks for joining us. Let me start by asking your thoughts on a double dip. I mean, you're one of our top-ranked forecasters. What do you see going forward?
That we're going to get a double dip. I think in the second half of the year, we do have the potential for the economy to grow at about 2.5% to 3% over quarter 3 and quarter 4. And into 2011, I think that we're probably going to see similar rates of growth, probably around 2.5% to 3%. It looks like we're gaining a little bit of momentum here as we enter the third quarter. Some of the fear that really impacted consumer and business spending in the months of May and June related to the European debt crisis seems to be fading. So that's positive. And some of the weekly retail sales for the consumer have been picking up as a result.
Hey, you know what? There's been an interesting debate about stimulus. Carol has been talking to Paul Krugman about that. He says if we don't have another boost in stimulus, we risk a depression. On the other hand, we talked to Bill Gross yesterday. He says more stimulus money would be like flushing cash down an economic toilet. Where do you fall there?
Well, I think that the normal levers that the government uses to stimulate the economy when we go into a weak period of growth, monetary policy and fiscal policy, I think they're both spent. There's not a whole lot extra that the federal government can do when it comes to fiscal spending in order to really stimulate the economy. I think one of the last things that really offers a good opportunity to give the economy the real strong boost that it really needs to get going once again is a payroll tax holiday for corporations. The way that could be structured is for the first, anyone hired over the first 12 months of the program, it's 100% payroll tax credit. Anyone hired in the 12 months after that, it's a 50% payroll tax credit. And what's good about that, it was have almost no impact on the deficit because those people that are hired would pay more in personal income taxes than the corporation would be credited with for hiring them in the first place. So things like that and lowering the overall corporate tax rate, I think, is what really needs to be done, just so long as there's the political will to do it.
Is there the political will to do that? I mean, although you wouldn't think that with this administration and with the majority in Congress, we have heard more and more Democrats talk about cutting taxes or at least not raising them.
Well, I think not raising or prolonging the Bush-era tax credits, I think that, or tax reductions, that would be a good thing over the intermediate term. Extend them for another year or two. But is there the political will to give corporations tax breaks right now? Maybe not. But what it comes down to is too many Americans have been conditioned to believe that corporations are big evil entities, and they're really not. Even if you're a mom and pop operation, one of the first things you normally do is you incorporate, and then you hire people. And so that's what creates jobs in this country is corporations and corporate growth. You create the right sort of opportunities for corporations to thrive, and you will have lower unemployment, and you will see unemployment come down quite rapidly. And if you do not take those steps, it's one of our last viable opportunities at this stage, then you're risking the economic growth for probably the next 3 or 4 years.
Russell, what about the concerns on the other side of that? I mean, a lot of Democrats will say you're going to lose tax revenue if you don't, if you let those tax cuts expire, or you need to raise taxes even to fight the deficit. You've got to be concerned about a $1.6 trillion deficit.
Absolutely. I'm a kind of a deficit hawk. I'm very much against the deficit. Things can be adjusted, actuarial adjustments to both Medicare, Medicaid, and Social Security, just like was done in the early 80s to bring down the deficit longer term. The corporate tax cuts that I talked about, I think, would stimulate the economy enough to overcome any cost that they would incur. In addition, corporate taxes really just are not that much of government tax revenue. And as far as the payroll tax credit goes, like I said, it would be more than offset in the income taxes that it generates on the other side for the person that is now employed rather than unemployed.
All right. Hey, Russell, thanks so much for joining us. Russell Price there of Ameriprise Financial, ranked one of the best economists for his GDP forecast by us here at Bloomberg. Now,